Welcome to this recording of Topical Thursday by the Stroke Recovery Association. In this video, we will look at the topic, Has stroke impacted your capacity to work? Hear from a stroke survivor about how they explored their personal insurance to access financial support. We have two guest speakers today. Our first is Bruno Muraca, who is a director and CEO of AFRM Claims Advocacy, ACA. The purpose of AFRM Claims Advocacy is to improve the well-being of clients and families by alleviating their financial worry. This is enabled by supporting clients throughout their personal insurance claims process. Bruno and the ACA team recognise that a client's well-being is made up of physical, emotional, and financial well-being. They are passionate about helping clients and making a difference to their overall well-being. Our second guest speaker today is Janette Daniel. Janette is a stroke survivor and long-term member of the Stroke Recovery Association. She had her stroke in 2013 and since has been a key member of her local stroke recovery club, Great Lakes and Manning, many of the online stroke support groups, and recently became part of the board of the association. Janette will share her recent experience of how personal insurance provided her financial support after her stroke. Thank you and enjoy.
Thanks, Michelle. And look, perhaps before I sort of go into the slides, probably a nice segue is to first of all say thank you for the opportunity to be part of Topical Thursday. And it certainly is a topic that is clearly passionate. We're passionate about as a business, but it's great to have Janette here as well to tell her side of the story, if you like. I also wanted to, first of all, have a big thank you to yourself, Michelle. I know that when I approached you initially to sort of speak to stroke survivors and increase the awareness around the support that might be available, you were very open to the conversation, and you whilst balancing sort of being guarded about ensuring that you're protecting the SRA brand and your members, and thank you for being open about that. Janette, thank you also for being on the front foot and wanting to increase the awareness across other stroke survivors. And finally, Rachel, for putting on today and getting things up on websites and emails out and so forth. So really, really thank you. As was mentioned, certainly will be an opportunity to ask questions today too. I don't mean it to be a presentation per se, but I'll perhaps use some of the slides that I'll share with you as some talking points for us, and certainly ask questions as we go along and specifically at the end. So I'm just going to share my screen now. So so just by way of introduction, so I represent the AFRM Claims Advocacy business. Essentially today, what we were just going to touch on was how we've been able to work with SRA and how we've been able to specifically help Janette. The topics that I'll cover off on include details around personal insurance, the types of personal insurance that are out there, some of the industry challenges, a bit about creating awareness, because what people are often aware of how their personal insurance can support them, considerations on how people are eligible, what the claim process looks like, and then some facts around personal insurance. But I'll keep the slides as talking points rather than reading straight off. To give you some context about our business, AFRM Claims Advocacy is sort of leveraging over 20 years of expertise in personal insurance, and we're really there to support, as Michelle touched on earlier, it's balancing out that sort of financial as well as physical and emotional well-being of clients. I'll just run into the slides now. So Michelle touched on it, but essentially our purpose really is to help people to alleviate their financial stress when they are injured or ill, and often it's a difficult time, and often it does impact people across differently. So our journey really is to alleviate some of that financial stress and help them with their personal insurance claim. We are, and the only thing we do is personal insurance, and we advocate for, in this case, stroke survivors, not the insurers. And that's the distinction there, I suppose, is that when we're working with clients, we are really ensuring that the insurer is being fair and reasonable with the client's policy and with the client's claim. We work closely with the insurer, but we do not work for the insurer, and that's an important distinction. We're currently obviously working with SRA, but we're also working with other foundations. Brain injury is one. We're supported by the Australian Patients Association as well, who do like the work that we're doing with other organisations. What is personal insurance? Often when we talk about personal insurance, the first thing people think about is their private health insurance, and it's not that at all. It's actually, personal insurance is in fact insurance that's there to protect the individual or the family if they are injured or ill. It's often purchased directly, and what I mean by that is you may have purchased it through the insurer themselves, or you may have gone to an accountant or a financial advisor and purchased your personal insurance. But most people actually have automatic cover in their super. So they might have Australian Super or Hester or whoever it might be. There is a level of default or automatic cover within super. And a lot of people just are not aware that that's the case, even though they are paying for it through their super. If there is a claim, a personal insurance claim, it does not impact the super balance. So if someone has $100,000 in their super and then puts in a personal insurance claim, at the end of that claim process, they'll still have $100,000 in their super. So it sits beside super, but it does not impact their super balance. And often people are told about if they're injured or ill to perhaps consider their superannuation, and that might be the case as well. But seldomly people are reminded about the personal insurance that's linked to their super. So what are the types of personal insurance cover? There are 4 types: income protection, TPD or total and permanent disability, trauma cover, and death cover. So income protection essentially is there to replace your income if you're not able to work, i.e. if you have had a stroke and you're not able to work, it's there to replace up to 75% of your income whilst you're not working. It's paid monthly by the insurer. Total and permanent disability is a lump sum payment that is there to support those who have had a significant injury or illness and therefore they're not able to ever work again. And Janette will touch on this, but it often can impact those who have had a stroke also. Trauma cover is really about providing a lump sum benefit on the diagnosis of a significant or serious injury or illness. So that might be cancer. That also includes stroke and other injuries or illnesses. And the final one is death cover, which is there to support the family of someone who's passed away and with a lump sum benefit. To give you an idea, income protection, the average income protection claim is about $59,000. The average TPD claims about $260,000. The average trauma cover is about $200,000, just on $200,000, and the average death cover is almost $300,000. So they are only averages, of course, but they can make a significant difference to ensuring that people can afford day-to-day living, but also ongoing treatment and care. And that's the intention of personal insurance, as I touched on earlier. Some of the industry challenges, and this sort of goes to the point I perhaps touched on before, but the awareness is quite low. And this is research by insurers, one of the main insurers being MetLife. They identified that less than 30% of working Aussies, working Australians, actually know they have cover within their super. So it's really interesting. So the awareness is quite low, and therefore often it's forgotten about to actually put in a personal insurance claim. The next point there is about that there's a lack of trust in the industry. Almost 50% of members don't trust that the insurer is going to pay their benefit. Now, having said that, the reality is that over 90% of claims get paid. So the insurer does pay. But I suppose, like all these things, the important thing there is that you are putting the claim together in a way that is easy for the insurer to understand and also to be able to effectively assess. I recently had an example where a client was, let's say the insurer incorrectly assessed the claim and short paid them by over $111,000. Now, that's what we do. I mentioned that earlier. We're there to keep the insurer honest and ensure they're being fair and reasonable. Now, that was just a legitimate mistake, but if no one had actually was checking on it, then that's a significant amount for the client in this case to miss out on. The final point there is claim fatigue. And what I mean by claim fatigue is actually a term that ASIC have identified, and they suggested that for TPD claims, within the first 60 days, 50% of people give up on managing the claim. And that's if they're managing it themselves. And that makes a lot of sense. If we think about it, if you had an injury or illness that's impacting your overall well-being, trying to go through the claim process yourself is often quite challenging. And no doubt Janette will touch on it, but there's a few forms to fill in. There's some details you need to obtain from your GP, etc., etc., etc. What we do is we try and eliminate that and help as much as possible. But the theme there is that if you're doing it on your own, just be mindful that it is quite involved. Creating awareness. I suppose when I reached out to Michelle, it was off the basis of the fact that less than 30% of working Aussies are aware of personal insurance and how it could help them at a time of need, or i.e. post an injury or illness. And we've helped plenty of people who have had a neurological or cardiovascular or other injuries and illnesses. So I reached out and said, well, I wonder how we might be able to further inform the community. And to date, as Michelle touched on at the start, we've been able to include some information to create the awareness in the newsletter. There's some key facts that have since been uploaded onto the website that talk to, and this is the Stroke Recovery Association website, which essentially talk to some of the things to consider if you're thinking about how your personal insurance can help. There's been some social media posts, which is one of the things has been the invitation for today's session. And we've since created a dedicated web page, and I'll refer to this page later on today also. The dedicated web page is really there to inform details around what is personal insurance, how might you qualify, and what the process might look like going forward to go through the claim process. But creating the awareness is really important. So it might be those online today, or you might know of friends or family or those part of your group who might not be aware of personal insurance. Again, that web page might be helpful for them just to get some background and find out whether it might be something that's important to them or not. As a stroke survivor, do I qualify? Well, I suppose there's three themes here that are really important. Do you have personal insurance? Again, most people, they're not sure. Have they purchased personal insurance directly? You'd probably know if you have, your accountant, etc. But the second point there is, might you have some personal insurance in your super? So the theme there is that if you suffered if you had your stroke whilst you were still working or employed, or had an active super fund at the time, then it may be worth exploring whether that personal insurance within your super can cover you. And again, and I'll make the point later on as well, but even if it's happened 10 years ago, 15, it does not matter. It does not matter. As long as you actually had a super fund at the time when you had experienced your stroke, it doesn't matter how long ago it occurred. the last point there is, has it impacted your ability to work? Now, that might mean that you might have been able to work only part-time for a period thereafter, or might not have been able to work at all. Either way, there certainly is an opportunity to explore your personal insurance cover and see how it might be able to support you. So in terms of our business, AFRM Claims Advocacy, we've got a two-step process to managing claims. The first step really is checking eligibility. What we mean by that is we recognise you've had a stroke, for example. We then go and speak to your super fund, let's say, and check the policy, and we come back to you and say, hey, guess what? You either have or you don't have a claim available to you. If you do have a claim, we explain to you the process that's involved. If you don't have a claim, we'll explain the reasons for that as well. As part of members of SRA, we provide that service, the eligibility service, pro bono. So there's no fee to check your eligibility. But it's really important that we start with that eligibility or that research phase, because it is quite involved to go through the claim process. And our expertise tells us that if we do the eligibility check well, which involves, as I said earlier, looking at your medical records, looking at the policy, the insurance policy, meeting with the insurer, doing a quick assessment based on our expertise, then from that, we can give some level of confidence around the fact that, hey, you do have a claim and it's likely to be paid, or look, you don't, and for these reasons, we suggest we don't progress with your claim. Because there's a bit of an investment from yourself as an individual going through this process, as well as for us. But we want to ensure that we manage the expectation. So that's step one. Step two, let's assume there is a claim. Then, as I touched on earlier, we're there to advocate for you. We don't work for the insurer, we work purely for you. And that process is quite involved, but the key themes are, there's obviously claim forms that need to be completed, and we help complete those claim forms as much as possible. Obtain the relevant claim forms that need to go to perhaps your GP and other specialists. We obtain those. We ensure that of course, all of this happens with your authority, but we ensure that we speak to the insurer and ensure that the insurer doesn't contact you throughout this process, so that it alleviates that burden from you. And we have all the conversations with the insurer whilst keeping you ahead of the game in terms of what conversations we're having and what decisions we're making. We don't make any decisions without your knowledge, but it's important that you focus on your well-being, and we'll handle the tricky questions from the insurer. In addition to the claim forms, we establish who the claim manager from the insurer's end will be. We build a relationship with them, and then once we lodge the claim paperwork with them, we politely nudge them to manage the claim. What I mean by that is they have a lot of claims coming in, as you can imagine. We want to ensure that yours is at the top of the pile so that they effectively assess it. And the sooner they assess it, the sooner there's a claim outcome, which we can then communicate to you. I think with Janette, and she might touch on this, but I think we sort of got it over the line. You might be able to test me here, Janette, but I think it was less than 20 days in total after we lodged it, so which was quite good, and it sort of takes a bit of our expertise to be able to just keep on the insurer, as I said, and politely nudge them to look at your claim and make that assessment. Did you know? Here's just some facts about personal insurance, because it's not really one of those topics that gets widely spoken about. And it's interesting when I go to a family barbecue or party or so forth, and people start asking, what do you do, and all those sort of natural questions, and you start talking about this, and often people go, geez, I wasn't even aware, and it's like, oh, and so forth. So but look, a couple of points here. You're probably, if you've had a super fund, you're paying for personal insurance in your super fund. That is for everyone. Personal insurance is part of your super. It's a default cover, and you've been paying for it. So if you're paying for it and you're entitled to a benefit, then you should look at exploring it. As I touched on earlier, if you put in a claim, it doesn't impact your superannuation balance at all. If your stroke occurred years ago or it happened recently, it does not matter. We've looked after claims that have happened back in the 80s. It doesn't matter. Sometimes what we find is clients speak to us and say, look, I've got my super, I've actually taken out all my money from my super. So it says I've got nil cover and I've got nil balance. Is it worth checking? Well, it still might be worth checking, because if your stroke occurred 5 years ago, it might have been active at the time. So even though today your super balance reads nil, or your cover is nil, it's all about when it actually occurred. Personal insurance can be paid even if you receive NDIS. So if you receive NDIS or even other compensation benefits, then you can still receive personal insurance. So we've helped people who've had a traffic accident, workers' comp as well, etc. And as I mentioned earlier, as part of the Stroke Recovery Association, that eligibility check is for free. So you can decide to use our service if you like, or work out whether you have a claim and then decide from there which way you want to go. This is my last slide before I get to Janette. So the process, if you wanted to check eligibility or what have you, I think the first step really is to look at that website that we've created with the Stroke Recovery Association. It has a lot of good information there to, again, create the awareness around what personal insurance is, but also whether you're eligible or not. It sort of gives you some themes there, some of the things that we've touched on today too, perhaps. And it gives you an opportunity also to then either call or email. One of the questions we often get asked is, if I call you, do I need to have all my documents ready? And it's no, you don't. The key theme here is first conversation really is about us understanding your circumstances, understanding whether you believe you have cover or not, and then sort of starting the process from there. Whilst there is a lot of information to gather, we gather it together and we do it in small steps so that it's easy for you, easy for us, and then we make it easier for the insurer as well. So the starting point is really either an email or a call, whatever you feel most comfortable with, and it's an obligation. There's no obligation there to progress, but at least it gives you some comfort around what you might or might not be entitled to. But that's my little bit of talking. The real conversations with Janette, and Janette was terrific in this whole process, and I'm sure she'll share her journey now. But it was a great pleasure in helping Janette. I think we had a good time over the process of the claim process, but also it was a real pleasure to help you. So over to you, Janette.
Okay, so my process started by simply reading the summer autumn news club news, and I saw the blurb in there and I thought, what have I got to lose? So I contacted Bruno and we started there, and he took all my information and he sort of contacted, was it my super fund, and he said yes, and then he looked into it, he said yes, you've got somewhere to go. So we started the process, the paperwork trail, as I call it. And yes, there was a lot of paperwork. So Bruno just sent me all the paperwork. I had to make appointments with doctor, I had to get GP. Couldn't just get one doctor to fill out the paper. I had to get the GP plus the neurosurgeon, plus I had to go and get the employer to fill it out, and then getting the pay slips to go with that, which I deleted while I was at the conference in May off my phone. But I was able to re-get them because I was then sent them to myself and the principal. And then I sent them to Bruno, and he had no idea how to read them. Anyway, we got through that. Anyway, Bruno got all that. A couple of things we had to redo a couple of times, but that's beside the point. But yes, I've still got papers everywhere, but I know where they are. But yes, so anyway, we got through all that, and as I said, we had to redo a couple of things, but we got through all that. And then Bruno said, yes, it's all been approved. And he said, normally it could take up 6 months to get this done, but it took much shorter time than that. But the funny thing was, The day before he rang me, we were out at a Glam's luncheon, and I had an itchy palm, itchy left palm. And then the following day, Bruno at 5:30 rang me and told me that my claim had been approved. So my itchy palm was working the day before.
So Janette, for you, was it an easy experience really? And would you have been able to do it without Bruno's assistance, I think?
Absolutely not, Michelle. Absolutely not. Because I wouldn't have known how to ring up and deal with the insurers. Absolutely not.
Okay.
But so with him saying, now we need to get this form filled out, and I was able to do that, make those doctor's appointments and do that. And mind you, I had to get my neurosurgeon on the telephone to do one of them.
Right. So it was all done either through your GP with your employer and with a specialist.
Neurosurgeon, yep.
And they had to put a report in about what had happened to you.
Yes, they had to fill out the paperwork that was sent through to me from Bruno, yep.
And that involved your capacity to continue work, those sort of things?
Yes, that sort of stuff, yep.
It included a report from your physio, did it?
Yes. And that was handwritten, wasn't it, Bruno?
It was.
Yep.
So just on that, this is a really good point actually, Ray. So with the TPD claim, the insurer requires that your GP and a specialist complete the claim forms. Now your GP and your specialist, they're very familiar with these forms because they do receive them quite a bit from their other patients and clients. So they are familiar with them. The theme there around Janette's physio also is we felt that given the ongoing treatment that Janette receives from her physio, that some commentary from her physio would help the claim. And that's why we'd asked that they provided some of that detail, which, as Janette says, it was literally handwritten on the physio's letterhead, but that was perfect because it actually talked to the themes of Janette's capacity to be able to, walk, lift, all those sorts of things that require her dexterity, etc. So really important themes, and we felt that would help Janette's claim and case. So then we specifically asked for it, even though the insurer didn't need that or ask us for it. We felt it was important to tell the story.
Yeah, so that was a little bit of extra that we gave them from the physio.
A question in the chat said, is it income protection? Is that the same? But you covered that. There's 4 areas you mentioned, Bruno, did you not?
Income protection is included. So the idea of income protection is that it's there to replace your income up to 75% of what you were earning before your injury or illness. So yes, income protection is also included.
And does that go for how many days?
It depends on the policy. Okay, so it depends on the insurance policy. What we're seeing is a lot of income protection goes for 2 years, but then for other policies, we've seen them going up to the age of 65. It really does depend. And that's why when we do that eligibility check, if you like, we come back and we share with you exactly what your cover includes. So, hey, you've got income protection. It's going to, there's a benefit there of $1,000 a month. It's going to last until the age 65, so that you have a real understanding. Because again, go back to what we talked to earlier, the awareness is quite low. And interestingly enough, the insurers aren't telling anyone.
No.
So we find that it's our role, and that's why without sort of putting too much of a point on it, I mentioned it a couple of times, but we work for you. We work for the client. Because we believe, and again, over 90% of claims get paid by the insurer, but it's about actually ensuring that you're compiling it in a way that tells the narrative so that the insurer says, oh yes, I understand. Yeah, I understand that's Michelle. I understand that she has a policy with us. I understand her condition, and I understand how her condition meets the policy. Here's the assessment. But in doing that, there's quite a bit involved, and Janette, rightly so. There's a bit of paperwork. We're trying to alleviate as much of that as possible, but you imagine your GP won't speak to us directly. It's often better that it comes from yourself with the GP. The way income protection will work is if whatever injury or illness, if it's precluding you from working, then you're covered. As long as you have it in place with your super fund, etc. If it's precluding you from working, then it's covered. Now, with all of that, you and I can talk about that it precludes you from working, but the key theme here is that your medical specialist, i.e. your GP, for example, needs to put that in writing to say that, hey, you know.
What about if I have a different GP?
That doesn't matter.
Okay.
No, that doesn't matter, because often what happens is clinical notes get shared between specialists, and also if you go to a new GP, it's your new GP will often ask your previous GP for clinical notes. So that's no problems.
And Bruno, and I think you've covered this, but I'm going to ask it again just to be clear. So you mentioned those 4 things. Does every superannuation policy have those 4 things involved? So the trauma cover, the income protection, the TPD, and there was another one that
Death cover.
Yeah.
Death cover. Sorry, I should have remembered death cover.
Yeah. No, good question. In fairness, I don't think I covered that. So let me cover it now. So most policies, and I'll say most but not all, have income protection, TPD and death cover as part of the super. Trauma cover is never part of the super fund. That is, it needs to be a separate cover.
Right.
Okay? So that needs to be purchased separately. But what's interesting with all of this too, and perhaps will be not of a huge surprise, is policies from years ago often are a bit more generous with their definitions than policies of today. So some industry funds, Hester's, not specific to Hester, but groups like, when I'm speaking about industry funds, I'm talking about Hester's, CBUS, Australian Super, all those that you may have heard of. They may have of recent time made income protection an option, whereas years ago it was actually just part of your cover.
And it's an opt-out.
That's right, and there was a whole opt-out legislation that was passed, PYS, a few years ago now. But look, again, I wouldn't be all too concerned about all of that. A key thing there is just check your eligibility. Just ask the question and check your eligibility, because it's not as at today, it's as at the time when you were diagnosed. So if you're diagnosed 10 years ago, 5 years ago, 3 years ago, then ask for your eligibility to be checked as at that point in time, not today.
May I say that Bruno, with every appointment that I would go to, he would ring up and say, I'm there, make sure you give your GP or your neurosurgeon my number if they have any questions whatsoever.
Okay.
And even since then, my accountant has rang him and spoke to him about it as well.
And you did say that it doesn't impact an NDIS.
No.
Any claim that you receive does not impact your NDIS.
No. In actual fact, it probably adds weight to the claim, because clearly, if you're receiving NDIS, your capacity is as such that you need some additional assistance. So I often use that as part of the narrative back to the insurer. I will just touch on what Janette's spoken to there about GPs and specialists. I did say this earlier, and it certainly holds true. GPs and specialists, they would all be familiar with the claim forms. But often what we do is, with your permission, is I ask that if you would like me to attend the first 10 minutes of your appointment with your GP or your specialist, and it's often over the phone, then that's part of our service. And what that does is it gives your specialist an understanding of the claim that you're looking to progress, and more specifically, the policy definition.
Yeah.
Now, I'm going to get a bit technical now, but I would like to just to paint the picture. Sometimes with TPD, total impairment disability claims, the definition is just if your condition renders you totally unfit for work ever again, full stop. Okay. Others will talk to the fact that you need to be able to satisfy what they call activities of daily living. So you're not able to bathe, you're not able to feed, and you need to go through and demonstrate you're not able to do all these. There's 5 of them. You're not able to do any of them. You can see how the bar there is set a lot higher. Now, sometimes we've had specialists go, "Oh, look, you're not TPD. You can butt your own shirt. You're fine." It's important, therefore, that we speak to them and have them understand your policy and your policy definition, because it does vary, and that could be the difference between them completing the paperwork and not. And once they understand it, then it's easy for them to say, well, objectively, based on my medical opinion, you are rendered unfit to ever work again.
Yeah.
Full stop, and fill it in, and away they go. So it's important sometimes to have someone to speak on about that theme. The other thing too is sometimes, and we've had some clients who are less comfortable to talk to the claim component of their health with their specialists, and that's okay too. So we can, either way, we can support if required. I suppose there's nothing like your medical specialist, your GP, that knows about your condition the most, but often the insurers will also ask for other medical specialists, like neurologists in this case, to provide support as well. Even though your GP probably knows, is well aware of your condition, having something from a neurologist is often really important, in particular with TPD claims. Everyone's condition and everyone's treatment and everyone's ability to return to wellness is different. And our conversations with clients are always different, regardless of similar medical conditions, because they are always different and we treat them all differently. I think the other theme there that sort of comes to mind is that sometimes some people, depending on their injury or an illness, are able to actually return to work in a limited capacity. So let's say they're working full time before they had, in this case, had a stroke. Then they might go back to 1 day or 2 days a week. So there's a lot of policies, in particular income protection policies, that will supplement that income. And what I mean by that is your employer is paying you for working 2 days a week. The insurer will pay the other 3 days a week, if you like.
Yeah.
Okay. But you'll never exceed that 75% of your pre-disability income.
Right. Interesting, isn't it? It's actually quite a complicated process that, when you delve into, a lot more people would be eligible for it than they really do realise. I find that really a fascinating one, actually.
Yeah, and also not only are they might be eligible, but we've had clients who eventually come to us and said, I rang up the industry fund and they said, I'm eligible to take my money out of super.
Yeah.
I said, yep, and you are. And I said, did they speak to you about your insurance? Oh no, didn't mention it.
Yeah.
And I often, and again, and this isn't my bias here because of what we do, but I often say, start with your insurance and then your super, because your super, once you take your super out, you can't actually commute it back in necessarily. Your insurance is an entitlement that you've been paying for. If you're eligible for it, we'll start there. If you then need to access your super, then absolutely. But you need to get that. You need to get that right. And I think again, it's incumbent upon the industry funds and the insurers to advise you when you're making those calls to ask, well, hang on, why do you want money out of your super? Well, let me just ask a few more questions here and understand, because in actual fact, maybe that's not your starting point. Perhaps it's other insurance that's associated with it.
I know you said that these payouts don't have an impact on NDIS, but if you're someone who's on the pension, for example, does that have an impact on those payments?
Like a DSP or so forth?
Yeah.
Again, it really is. So with a TPD payment or one of those lump sum payments, no. With income protection, it might, but it depends on the policy. Okay, because the idea of income protection is there to replace your income if you're not working. Now, what we're saying is, with some of the policies actually don't consider DSP and other support as part of the person's income for working. It's actually separate to that. So, sorry, in a long-winded way, for lump sum claims, TPD certainly not, and trauma. But for income protection, it really depends on the policy.
After receiving a payout from a claim like Janette has, is there like a list of things that you need to go and check that people need to be aware of?
Well, Janette, I might throw to you on that one. You're well versed in what your next steps were after that.
Well, I went and saw the accountant, who also contacted Bruno, and we're setting up a plan. I've actually got an appointment with him here tomorrow morning, and we got see which way where the money's going to go and to provide the less taxable way. Because you do have to have paid. You would, depending on which way you go, there's quite a sizable tax.
That's a really good point, and we always encourage clients after the claim process to go and seek advice. As Janette's touched on, it's really important from a perspective of if you can minimise tax on that journey, then I think that's a good thing. The other component that's really important here is that all of a sudden, if you're TPD, you may actually also be able to access your super. So it's looking at it holistically about what's the best arrangement for you. Now, we're really clear. We're not licensed to provide any of that advice. So we stay within our lane. But as for the example with Janette, I sort of said, hey, look, do you know someone? And Janette did. She's got a friend who's got a really good accountant, which she's since seen. Because I'd like to share with you an example there where sort of tips and traps. So one of the clients we helped a while ago, I asked the same question at the end. I had a TPD benefit payment, and I asked the same question at the end. And the question I asked was, do you need to get advice? Do you know someone that you can get advice? And they said, look, I do know someone, I'll go to my accountant. It's terrific the way they went. I got a call a few months later, and what actually happened was their TPD benefit, so their insurance payment, the instruction from their accountant, unfortunately, was to put it into their super, which makes sense, but they didn't instruct the super fund where within the super fund to invest it. So it was invested in the market rather than in cash. Now, I know we're getting a bit technical here, but the summary of the story is this. The insurance benefit was invested in the market, and the share market went south, and she lost $80,000. So, it's a real trap. It's a real trap, and it's significant. It was significant money that she'd actually lost.
It is when you've got permanent disability, isn't it? It is.
Who pays for Bruno's involvement?
Good question. So we do the eligibility check for free. And then from there, if there is a claim, we have three types of claims: basic, an intermediate, or complex claim. We're a flat fee for service business, which means we don't charge a percentage of your benefit. We charge a flat fee. So for our basic claims, it's $2,800. And for our complex claims, which are TPD claims, it's $6,000. Our intermediary claims, which are often the trauma claims, is $3,875. And they're all in writing, they're all a flat fee, and we don't charge a percentage. The client pays for that. Yep. Maybe on that topic, it's probably worth also speaking about our terms. So as I touched on earlier, our purpose is to improve clients' well-being by alleviating their financial stress. So for an income protection claim, we wait until the client has received 3 months of benefits from 3 months of benefits from their insurer. So they wait till 90 days after they pay for us. Now, why do we do that? It's because of our purpose as a business is to, again, alleviate financial stress. We don't believe in the first insurance benefit that the client receives from an income protection that they pay us.
So it's not an upfront fee then, Bruno?
Not an upfront fee. It's at the end. With the other lump sum claims like TPD and trauma, we wait after the claim outcome, and there's 30 days on that.
Bruno, is there anything you wanted to sort of say in sort of summing up?
Look, what I was going to say was, again, thank you for the opportunity to be online today. And also, it's just interesting that the conversation's been terrific, and hopefully we've created some awareness here today. Please speak to others who you know who have been injured or ill, whether it be stroke or otherwise, because again, not a lot of people are aware, and I touched on it earlier, but the insurers aren't telling anyone either. So if we can further create the awareness, then I think that's a good thing. And whether people go and seek support from their accountant, their financial advisor, or do it themselves, or choose to use our service. It doesn't matter as long as someone's received some help. So I always say, I often speaking to groups just like this, and I say, well, put your hand up if you knew that you had personal insurance in your super, and it really is sort of 2 or 3 people sort of put their hand up. And sometimes they put their hand up because they've actually gone through and experienced it before. Otherwise, they were none the wiser. Because I don't know, if you're anything like me, you receive your super statement, you go, oh, yeah, I'll read that on the weekend, and you put it in your pile, and then it doesn't get read. And no one looks at the back side of it, the reverse side of it. Often where the insurance is all talked about. So
only how much fees are being taken out.
And the fees, they're always in a bit smaller copy, though.
Yep.
Yes.
But look, once again, thank you. Really, hopefully you enjoyed the conversation. I certainly have. It's been good to be able to create a bit more awareness, and really appreciate the time.